You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back. It is Thursday. It is time for part 2 of your bi-weekly options dose known around the globe as the Option Block. My name, of course, Mark Longo from the Options Insider Radio Network. Been a fun week on the network. A lot of great stuff popping off. If you missed any of it, make sure you subscribe to the full network. If you want to check out an awesome pro Q&A with Mr. Tom Sosnoff, then check out the Pro, theoptionsinsider.com/pro. The lineup of people who want to get in and talk to the pro folks is just absolutely wild. We could probably do 5 of those. We could do one of those a day probably if we really wanted to. So get on over to the Pro. Check it out, theoptionsinsider.com/pro. Today's the last day to get your name in the hat to potentially win the April Pro Trading Crate. And I do have in my hot little hands a fresh case of Dan Passarelli's new book, Build Consistent Wealth with Options. Might be a blurb or two from me and some other folks you might know from the network on the back of that book. So that makes it extra fun. We might be able to put one of those in the April Pro Trading Crate. So if you want to get your hands on that book, get on over to the Pro. Theoptionsinsider.com/pro is the place to go as we go around the horn. See who's joining us today. First, out to the hallowed halls of SIBO East, where we are joined once again by the Flowmaster himself, Mr. Henry Schwartz, from the aforementioned SIBO. Mr. Flowmaster, welcome back to the show, sir.
Thanks, Mark. It's great to be here. It feels like I haven't been on for a while. I've been doing a lot of traveling, but I'm excited to join and talk about these markets, which they just keep you guessing. There's so much going on.
You have been traveling quite a bit. Where were you last week? What conference required your attention last week, sir?
So I was at SIBO Risk Management Conference that was in Nashville, where I did my State of the Industry, and we streamed it live, and I think we're well over 100,000 views now, which is kind of amazing.
You're a hit with the kids, sir.
Yes, I am Twitter famous, me and the Kardashians. And then I had a week off for vacation, and then I'm back, and then next week I will see you at OIC in Florida.
Yes, we'll do a show in person, I do believe, next week down at the old OIC. So that should be fun. Me and Henry in the same room get up to all sorts of mischief. By the way, I like that room behind you. I'm trying to decipher what's going on in that whiteboard. I'm going to figure out the next secret SIBO product as we keep rolling out to the realm of the hallowed halls of St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show. How are things in the land of St. Charles?
Always a pleasure to be here. About an hour ago, I thought we were going to make new all-time highs in the market, but maybe the market's just saving it for the show, for it to happen live on the show. But we're about 4 or 5 points off all-time highs. Just kind of been teasing us the last hour, so maybe Kool-Aid Man might break in when someone else is talking.
The second we turn off the mics on this show, sir, we are going to hit it. So just know that ahead of time as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. And if you wanted another green day on the screen, you got one. So we are departing from our Thursday Blood Red Flowmaster visits. The last couple of weeks, they have been green, and today is no exception, up over 0.5% in the S&P. NASDAQ up 0.25%, nearly 1/3%. Dow up about 1.4, closing in on 1.5%. We didn't start that way. We started out slightly in the red in the S&P. NASDAQ was in the red, and the Dow was obviously not up as much, but it seems like we've taken that second leg up now, as we like to do. You know, once there's any pause in the buying, that is just a signal to buy more, listeners. VIX cash at about a 17.5 right now. That puts it down about exactly 1 point from where it was on the Monday show. VVIX 95 also down exactly 1 point from where we were on the Monday show. But since the Monday show, we have gotten a lot of data in our hot little hands. We had the Fed yesterday kind of punting once again. It does seem like, despite all the efforts by the administration, we're not going to get any rate cuts. In fact, they're pricing in the possibility of some rate hikes down the road. So if you were thinking this market was rallying on the back of rate cuts, which it obviously was for many years, those ain't coming anytime soon. We had all the mega AI earnings last night, and I've been joking for a while that this market is all being carried on the backs of AI, because really what else is there? You're not getting the rate cuts that the market was rallying on for multiple years. The war is, I think, in limbo, to put it mildly. There's talk we could start resuming hostilities at any moment down there. The blockade is still in effect. Crude well north of $100 yet again. So it certainly is not the war that's paying dividends out there. It really is all on the back of AI now. You heard the numbers last night. They are wild. How much we are spending. I mean, we got the GDP numbers this morning. It's reflected. It's moving our GDP now. That's how much we are spending on AI. The CapEx is along the lines of things we've never really seen in private enterprise before. The numbers just boggle the mind. We're doing a Manhattan project a month, I think, is the spending. If you add up all the mega caps, your Alphabets, your Microsofts, who all had kind of mixed bags. Numbers were good, but good across the board pretty much. But the AI spend really spooked a lot of people, including Meta. They always seem to come for Meta very aggressively whenever they announce their spend, because their spend is so aggressive. They're cumulatively planning to spend $700 billion right now. It's moving GDP. That's why our GDP was 2% in the most recent number today. 1.5% of that 2%, if you add it up, was AI-related spend, not just the infrastructure to build them, but also the hardware and software that goes into them as well, driving our GDP. So it really is all in now on a bet on AI. This thing has to work. If it doesn't, I can't imagine the losses these firms are going to have to contend with. There's already folks out there. I take a dim view of analysts, but this one guy's been making the rounds, and I thought this was kind of funny. He's an analyst. I don't know what firm, but he calls this sheer insanity. He says they're spending more than the Manhattan Project every single month. And none of them are making profits, he says. None has a technical moat, which is a good point. The only moat so far is who can spend the most. That's really the only barrier to entry in this space. So there is no technical moat. In his view, he says a massive price war is inevitable. And that is an interesting point. Once they start turning around and stop spending and try to actually monetize, though, these might be interesting to see if the price war does kick in. And he says this is the greatest capital misallocation in history. This quote's been floating around quite a bit out there. You know what? All that baked into the fact that the market don't give an F The market's all in on this bet on AI. So if you've been buying this S&P that's up over 10% since the nadir for the conflict, you are in on this bet for AI. So it's quite the show we got going on here, listeners. Absolutely wild spending. Can we spend ourselves into record returns yet again? I guess we shall find out. Let's go around the horn. Let's go out to the Flow Master first, because we know we want to get to Uncle Mike in a second. We'll let folks linger for him a little bit. Maybe we'll get his all-time highs. But Mr. Flow Master, we'll start with you, sir. Obviously wild times. I mean, forget about the geopolitical side. Just looking at the straight, domestic side here. These AI numbers, I think the technical term is wild. I mean, we're moving GDP. We're spending so much money now. What are your thoughts on what we're seeing out there and the market action, sir?
Never before. Hold on. Alert!
I knew it.
Never before in the history of the entire stock market has there ever been a better time to sell than right now. Sorry, Henry, just had to chime that in right as it happened. Excitement on the show.
I was trying to buy you time. Turned out you didn't need it, sir.
That's my signal to sell a couple futures.
Yeah, sold to everybody.
There you go.
It is obviously we're in turbulent and interesting times. I think what's really interesting on this the AI situation, I guess, is the technology. If especially people that trade options, they get very, very comfortable with highly technical things. So I would bet that every single listener we have out there has played around with AI, maybe used it to write some scripts or some scanners or whatever, and like the things that you can do now are just really kind of mind-boggling. But what's interesting is to see this massive capex. You're changing these information technology companies, which are generally historically are low cap businesses. They don't need super duper amounts of capital, so they end up with very high margins. You're changing it into kind of a business a little bit more like an industrial, where you have to lay out tons and tons of capital to do your business. So, some of the studies that I've paid attention to talk about how, generally you don't see a high multiple on kind of businesses that require so much fixed capital to operate. But that said, I mean, this is one heck of a wave. Plenty of people saying this is, like the Industrial Revolution. I mean, this is a revolution of some sort. I think it's just a question of how it's really going to turn out and how sure, are all of the companies that are investing just unbelievable amounts of money. So I think it's interesting. Looking at I'm looking at year to date now, we're up. Not only are we up almost 5% in the S&P. Hold on, I'm making some money on those futures, so I need to cover them so that I can thank Mike for giving me the impetus. All right, we're good. So Russell's up 12% year to date. The Russell 2000 index. That's generally an index of more industrial names, not the technology darlings. 12% year to date is really kind of astounding. We're on the last day of April, and this is an amazing month. 9.9% for the S&P, 11% for the Russell, because we came in kind of at when we were actually down on the year. So it's one heck of a month, and it's kind of is one of those months when you see the studies of kind of market performance, and everybody's afraid of a crash, but really the bigger issue is not being invested when you get a run like we've had this month. So VIX. I was just talking to somebody yesterday. Okay, we have a war going on. We have the Strait of Hormuz is closed, and there's no clear exit strategy that anybody seems to be aware of. And yet you've got VIX at 17, you've got S&P at all-time highs. You don't see a lot of skewness or fear in the market. And the real question is what the heck that means. Does it mean there's an opportunity to hedge or even kind of lean short? Or does it mean that, the market really sees the future and things are going to kind of turn out, fine? And I kind of feel like we're in a weird in-between place. we've this bull run has been running for years, right? 2022 was a down year, but basically go back to 2018, and this market has marched straight up. So, I just think it's a great trading environment. It's also an environment where you got to be a little careful. I wouldn't just blindly pour all my money into the market at kind of these levels. But at the same time, even NVIDIA, which pulled back, from its all-time highs, significantly, it's kind of roared right back to new all-time highs. So it's kind of a wild market. It certainly is an advertisement for why the globe basically invests in kind of U.S. financial markets specifically.
Wild stuff indeed. Uncle Mike, I think he's still recovering. He gets the vapors, listeners. Mr. Uncle Mike, sir. I know you get excited whenever you get to do the all-time high. So hopefully you've had enough time to recover from your vapors, sir. But what's catching your eye in yet another green market carried pretty much entirely on the back of massive generational AI spending, sir?
Yeah, it's been very unique, to say the least. And it is always exciting when you get an all-time high happening right on the show and timing out on the show. So it's always a good day when you get to do something like that. So now hopefully the markets don't crash and ruin it. But nonetheless, one thing that I can say this year, just with the stocks that we work with RCM in general, never before in the history of my time at RCM in the 15 years or so, it's definitely has been more discrepancy between our winners and our losers. Now it's balanced out. We're still doing fine. We're having a good year overall with a lot of our portfolios, but it's like I'm looking at them and I'm seeing stocks that are just way up there, that are just ridiculous. But then I'm seeing other stocks that's like, well, that really shouldn't be that far down. And so we've really had a lot of that, I would say, in this market in general. So I'm just looking at some news from yesterday, or some just the results from yesterday. Now, of course, Meta just got its butt kicked yesterday. It's down 9% on the day. But on the flip side, you got Google, that's up 9% on the day. And these aren't names that no one's ever heard of. This is happening with larger companies. Also today, NVIDIA is down over 4%. It's back at the 200 level. That's usually not that big of a deal for NVIDIA, that type of a move. It's maybe a little bit more than normal, but that's just kind of where it's at right now. And also today we have AMD up 4% on the day. Amazon moving 1% on the day. That's really not that much, all things considered. So there seems to be, it's kind of like a high school market. You got the cool kids, the popular kids, and then, man, if you're not one of the cool kids, then man, you're like Microsoft all of a sudden. Microsoft was a cool kid for the last few years, but apparently Microsoft missed the game-winning free throw at the basketball game or something, and no one wants to talk to the poor kid anymore because Microsoft's down 5% on the day. So a lot of things happening, a lot of things going on, of course, with AI, of course, with the Fed being not that big of a deal yesterday, and punting, continually doing nothing. And then you got the Russell in there, up like it is on the year. So a lot of things happening, a lot of things going on with where we're at. We are actually in Qualcomm in our covered call strategy. However, unfortunately, we thought we were really cutting a big pig in the butt when we were getting $6 for the 138 call for the month of April. That's a lot of money on that covered call. Good stock. We like it. But hey, you know what? Could be worse things than making 6% in a month. But with Qualcomm at the 178 level right now, that's possibly the most in the money I think we've ever had a covered call in our covered call strategy since we've been doing this. So, and what's crazy is that there's still actually a few pennies left in the covered call. If we wanted to close it out, wouldn't get the full 138 for it at this point. So with that, a lot of large moves happening right now in this market, and we live in interesting times. I'll leave you with that, Mark.
What was that term you used? Cutting a pig in the butt?
Cutting a fat hog in the butt.
Oh, okay.
I'm sorry. I think I said pig. I meant to say hog.
That's a new one for me. I need to start describing my covered calls with your farm terminology. I like it, sir. It's appropriate.
Absolutely. We cut a fat hog in the butt with that $6 on a $137 stock. And it went a lot further than that.
There you go. So listeners, cutting a fat hog in the butt is a good thing. You want to cut fat hogs in the butt, apparently. That's a good thing. I like that. There you go. I learned something. You know, I was in the swine building in St. Charles this past weekend. I think I would have picked up some lingo, but apparently not, sir. Speaking of St. Charles, really quickly, I'm curious. Obviously, you're Super Bowl. You represent the cabal here on the show. What are the clients up to over at St. Charles? Are they calling up? Are they starting to say, I'm spooked on this. I'm all in on this. Get me more. Well, what's the feedback been like, sir?
It's bad. So my longer term clients, they've all been very, very much like we have things sectionalized. So in other words, we have the hedge stocks hedged. We have the buy and hold stocks being bought and held. And so not really getting a lot of feedback from them, but from the newer clients, it's still a little bit of caution, I would say, overall, because there was, with the war, there's still a lot of caution in the air with the newer people, from what I can tell.
So they're calling you up saying, Uncle Mike, put me in these hot, sexy T-bills? That's what they want?
They don't say it with hot and sexy, but...
They say, I want to cut a hog in the butt with the T-bills. That's what they say, right? Am I mixing my metaphors?
Well, in some ways, yes, because on Twifo, I think you talk more about lean hogs than fat hogs, so you need to balance it all.
All right. All right, let's see if we can cut a hog in the butt with this market, listeners. That's my new favorite term. I'm not sure if I'm using it correctly, but it sounds fun. Either way, is VIX cutting a hog in the butt today? The answer is no. Apparently, no one told VIX to wake up today, or they forgot to turn the machines on. 260 is what we have on the tape in VIX land right now. So this is starting to look like summer has come early to these markets, barely over 250,000 contracts. You know, if the ADV is 550, 600,000, that's not bad. When the ADV is threatening 1 million contracts like it is right now, that is not exactly a lot to get excited about. If you're wondering what are people excited about out there in VIX land, such as it is today, the big dog, 27,000 of the May 17 puts. We're back to the downside, listeners. If you're wondering, those going up for around 28 cents. So if Twitter polls would work again, we could maybe take your pulse and say, hey, are you a buyer or a seller at around 18 cents? Maybe we'll try one more time, but it does seem like Twitter, at least for now, has broken their polling functionality out there. So we'll tell you what, we'll put a poll up. We'll see if we get any results, listeners, by the end of the show. We will let you know as we keep going out to SPY land. SPY, 6.25 million contracts right now. The ADV, 12.1, so obviously over halfway to their ADV. We'll see if we can get the second half in the second part of the session or if things kind of quiet down. The S, a little over 3 million right now. The ADV, 5.1 million, so certainly well above halfway to its ADV as well. Small caps, Henry's beloved small caps, 1.06 million contracts on the tape today. So that is spicy. By the way, they're up 1 2/3% right now. So small caps getting the bit in their teeth, as Henry was alluding to. The ADV, 1 3/4 million, certainly seems like they are on pace to hit that today. And the Qs, 4 million. The ADV, 6.8 million. Interesting to see the Qs kind of lagging behind everything else, at least earlier in the session. It seems like they are trying to make up for lost ground, but they are still lagging out there right now as well. Of course, getting dragged down by some big tech names. We'll get to that in a second. Speaking of the big tech names, our top 10, I'm looking here. I do think, this is the first time in quite some time. We always have one or two surprises sneaking in there. Yesterday, we had, Nokia. We've had other names recently popping in there. Robinhood after their earnings, SoFi. We've always have at least a smattering of non-tech names in our top 10 today. Today, it is all tech all the time. Also looking very spicy. Over 500,000 contracts already on the tape. So that is beyond a certified banger. A certified banger is 450. We're north of 500,000 contracts. I can't remember. It's been a while since we've been north of 500,000 this time of the show. So that's up there with some of the spiciest mid-show volume we've ever seen on the option block. All it takes is all of the mega caps reporting at once and spending nearly $1 trillion on AI to generate these flows, listeners. Number 10, AMD, 506,000 contracts to break into the top 10. That is wild. AMD has been wild as well, been on quite the rampage. And you know what? They're not done. Up another nearly $15 today, or about 4.5%, trading 352 right now. So AMD on the run for number 10, listeners. Number 9, Qualcomm. Qualcomm up $22 today, or 14%, trading 178. Over the past month, it's up nearly $50 or 38%. So wild stuff for Qualcomm. Number 9, 539 on the tape. Number 8, some fruit company that may or may not be popping off after the bell. We'll ask Uncle Mike later. He can confirm the earnings for us. Apple up $2 today, trading 272 and a quarter. 567 on the tape. All eyes on them to see how they spin this new CEO as well. So a lot of things going on in Apple, not just the will they, won't they AI expenditure dance, but also what's going on. Do folks, are they excited about this new CEO or not? I guess we shall find out after the bell tonight. This name, Intel, I don't even recognize this name. I spent a while making markets out here in options in Intel. And 93, almost 94 handle, getting up to 95 today. I don't know what name this is, but it is not Intel. This is absolutely wild stuff. Number 7, Intel, 737 on the tape, $93.88. Yes, Intel can sell off. They're off nearly $1 today. But this past month, there are no words. $44 is where the stock was exactly a month ago. It hit $95 today. It has doubled, more than doubled. Just wild stuff. And that's on top of already a good run. At that $40 level, it was $20 like 8 months ago. So it had already doubled to get to that level. And now here we are, more than doubling again from that $40 level. So Intel just cannot have enough upside, apparently. There's not enough zeros to contain all that is Intel right now, apparently. Number 7, 737 on the tape. Again, wild. I was making markets out there when it was the NVIDIA of the world back in the tail end of the .com bubble. And it was nothing like this, listeners. Absolutely wild. Number 6, Alphabet, 384.14, up $34 or nearly 10%. They are spending money like drunken sailors. At least the other parts of their business are making money to somewhat offset that. Cloud printing money for them. So that does help. It does help ease the pain. Google, number 7, 812 on the tape. Number 5, the name that always seems to get just shellacked with the spending ugly stick every quarter is Meta. For whatever reason, they just exceed. They just seem gluttonous in their spending for whatever reason. The street always seems to get angry with them for how much they spend. They shellac the stock. Then they end up bidding it up again till the next cycle. Usually a round of layoffs or two happens in between there. Stock rallies. We get to the next earnings announcement. Oh, we spend too much again, and they kid it again. It's kind of a ridiculous cycle right now. We're back threatening the par strike in the other direction after we rallied all the way through it. Off $61 today, or 9%, trading 608. So apparently Meta is the only one you're allowed to beat up of these names for spending just ridiculous amounts of money. Also a good point that Flowmaster brought up about the comparative margins of massive trillion-dollar infrastructure spends versus just, scraping everyone's data and reselling that to them. High margins on that. Not so much on multi-billion-dollar data centers. But I digress. It's number 4, Microsoft, 401.5, off about $23 or about 5.5%. So seemed like maybe they had begun to claw their way back from the just utter annihilation they had suffered post earnings. They sold off to about $350 or so in late March, and then they came roaring back to life. They got up to about $434 or so, and then now right back down to the par strike, 401.5, off about $23. Number 4, Mr. Softy, 962 on the tape. Number 3, the Amazonians, they're selling off as well, 259.5, off $3.5 or 1.3%. Kind of wild to have all these names pretty much in the red and the market still firmly in the green today. Kind of interesting. Number 3, the Amazonians. Number 2, it's Tesla. They are green today, 378.5, up 5 2/3 or 1.5%. Good for number 2, 1.71 million. And the big dog, this is also rare to see the markets green when NVIDIA is red, let alone off over 4%. That is somewhat wild. Off $8.5 or about exactly 4%, trading 203.75. Of course, they did just set a new all-time high not too long ago. For some reason, my machine is still showing the all-time high is 212.19, but that is not correct. We know they got up to, I think it was around 216 and a half, somewhere in that range. But either way, back threatening the par strike in the wrong direction again if you are an NVIDIA. Actually, they did break it. They got down to 198 and change this morning. So they did break through it. So interesting stuff. NVIDIA already a day's worth of volume, 3.1 million contracts out there. If you need more earnings, like we said, Apple after the bell. Also Rivian. We have been talking a lot about EVs lately. Our pro members have been asking for some EV talk, and Rivian looking good today, up about nearly half a buck, trading 16 and a half. So interesting little run here for Rivian. They were 17 bucks last week, so they have been kind of bouncing off that 17 and a half level recently. We'll see what they do post earnings. Are you trading any Rivian out there? Hit us up. Let us know, listeners. Let's look really quickly. We obviously talked about a lot of the earnings already here. We had Qualcomm. I mean, let's really quickly. Qualcomm was at 156 going into their announcement. They were pricing in 8%. They delivered 13.5%, listeners. So wild stuff. Meta was pricing in 6.8%. They delivered about 10% in the wrong direction. I think they have exceeded that now. Alphabet, weirdly enough, was exactly in line. 5.5% is what they were pricing. They delivered, as of the time of this report this morning, 5.6%. So kind of unch there. Mr. Softy was underperforming. They were pricing in 7%. They had delivered less than 5%. And then, we had Ford. Everyone forgot about the dumpster fire that is Ford. They actually popped off last night too. Does anybody care when the mega caps are spending the GDPs of most developed nations on AI? Does anybody care about the dumpster fire that is Ford? Apparently not. Selling off today off 30 cents, back below the 12 strike where they belong. So I guess Mr. Overby just lost 30 cents worth of value. He can no longer trade options below $12 thanks to Ford. That's his cutoff. They were pricing in 5.2%. They underperformed as well. They had delivered 3.3% as of the time of this report. Again, there are dozens upon dozens of tickers here. Listen, we could do a whole show just on this. Maybe we will someday if you are intrigued. Amazon, they were pricing in 3.4%. They had delivered about 1% as of this report. So interesting to see. They were pricing in some juice and not even hitting that. 3.4% is not much for Amazon. If you want to see the season for, by the way, really before we get there, let's go out to Apple. They are after the bell. A lot of folks keeping an eye on them. They were right around 270 when we ran this report. They were pricing in about 9 3/4 in that straddle. So they're fairly juicy. In the past, they've moved less than $6, $5.92. So closing in on $4 worth of extra juice for the fruit company. Is that merited? Then again, massive shakeup at the top. A lot going on in Apple right now. So maybe it is merited to have extra juice on the top out there. Let's look really quickly, see if our friends Rivian are on here. Yes, they are. Rivian, they were at $16, $16.06 actually when we ran this report this morning. They obviously rallied about half a buck from there since then. They're pricing in right around $1.50. In the past, they've moved about $1.50. So there you go. Not much to be said there. Oh, and some name called SIBO popping off on Friday. They were at $305.60. They're pricing in $8.42. In the past, they moved $7.71. So 71 cents worth of extra juice. Is that merited in SIBO land? I guess we'll find out on Friday, listeners. And if you want to find out how the season is shaping up right now, it's a banger. Week 1, 109%. Week 2, 157%. We're on week 3 right now. So far, 138%. So all 3 of those weeks in the green. So far, our average for this cycle, 142%. That is wild. That's going to have to come back to earth, listeners. That's kind of unsustainable. Still a wild number. Our long-term average, 105%. We'll see how this cycle shakes up. So far, it's been a wild one. But you know, it's always a wild one when the Flow Master joins us. It is time to get odd.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
I just got distracted by our pro chat. They want us to include members only jackets in the pro trading crate. I don't know where we can find members only. Do they have to be vintage 80s era, or can we make new ones? Is anyone making new members only? Tell you what, if I could find a source, I will investigate that. That would be wild. Members, you are members after all. And maybe a sweet Options Insider Pro members only. You wear it to your finest establishment. That's the finest of fine wear there. I love that idea. All right, I got distracted. I apologize. All right, to the Flowmaster we go. Let's go out. If you're tired of this AI mega spend, you're like, is there anything else to talk about in these markets? How about alternative investment asset management, huh? Let's go out to Blue Owl Capital, ticker symbol OWL, trading 976, up about 90 cents or about 10% today. So a good day for them. They had earnings, and spoiler alert, they were good, apparently. They beat earnings, they beat their revenue estimates, so life apparently good today in Blue Owl. I say today because the rest of the year has been a certified dumpster fire. They're off nearly $9 or almost 50% on the year. Almost all of that, except for the last few weeks, has been pretty much straight down. They sold off from $18.50. They did rally briefly beginning of the year up to $21. And then ever since then, it was straight down until pretty much the middle of this month, when they bottomed out right around $8. And since then, they've been slowly climbing their way back up, including obviously rallying nearly $1 today. So interesting stuff, but just a terrible year. But nonetheless, Mr. Flowmaster, what did you spot out here in the land of Owl, sir?
Yeah, so this is a funky one. I noticed it this morning. I did see it was trading post earnings, and I think it was up a couple of cents or something. And an unusual call buy hit my scanner just at 9:43 a.m. Stock was 921, and somebody bought 2,660 of the Augie 10 calls. They paid up to 71 cents. It was one of these multi-market sweeps. It started at 70 cents, finished at 71. It was opening, and it did kind of pique my interest, especially because it was, the stock was only at 9 something. So I actually bought a little stock because I was like, I don't know what's going on, but we've talked about this before. There are times where things are just kind of really frothy. People are looking for signals and kind of put some money to work at fast. And I think right now fear is not, despite the fact that we have a more than one geopolitical crisis out there, the market doesn't seem to mind, right? We talked about that, fix at 17 and all-time highs. So I bought some stock and kind of scaled out of it and made a little bit of money. But that stock, which was at 921 when they bought these calls, traded over 1020 briefly. So right now it's at 976. So those calls are looking pretty good. There's no headlines, except for the fact that they reported results. But this was just kind of one of those, currently we're looking at 100,000 contracts have traded in OWL, and it's 81,000 calls versus 21,000 puts. So that call volume is 4 times normal. It is post earnings, so you kind of expect volume to be a little higher. But on the day, almost 26,000 of the August 10 calls have traded. Now those might be some of those are definitely being sold. Possibly somebody that's got the stock that's kind of happy to take that yield, right? Almost 7% out to August. But an interesting one, and it worked out. I don't know. It's probably run its course a bit now. We'll see what the open interest does tomorrow. But Blue Owl certainly worked out today.
By the way, don't think your pun was lost on me, sir. Who bought these? I saw that. I see you're a little punster. You don't even know it. You're slinging the puns. Uncle Mike's cutting the butts of hogs, and you're slinging the puns. We got all sorts of wild stuff going on the show today. Let's keep the wild non-AI fun going. Let's go out to Imperial Petroleum Inc., ticker symbol IMP. IMPP. Don't forget the second P for petroleum, trading $4.91. Kind of unched today. On the year, though, it's been a wild year in the petroleum market. That is reflected in this chart. A year ago, they were right around $2.50. They're up 236 or nearly 100% on the year. That said, they did top out last year about $6.50. That was in November. Then they fell off a cliff right down to pretty much close to the beginning of this conflict. Early to mid-February, they bottomed out. Looks like they bottomed out then around $3.25. Then they started rallying. They got up to nearly $5. Then they actually started selling off again during most of the conflict. Late April, they sold off down to about $4.25. And then since then, they've been pretty much rallying 75 cents or so to where we find them today, a little bit north of $4.90. Mr. Flowmaster, what did you spot out here and everyone's favorite IMPP?
Yeah, this is an interesting one. Obviously oil names are kind of the story given what's going on with oil itself. In fact, I listened to a podcast that Jem Carson was on this weekend, and there's some kind of interesting theories, but one was really just the kind of striking difference between Brent and West Texas. Obviously West Texas, we can pull it out of the ground and use it, but the price is being set globally, and their theory was kind of that you could see a massive dislocation between the price of those, and they're talking about ways to get convexity exposure to the differential, which I thought was pretty interesting. But this was one from yesterday that another one actually I kind of rode the delta on, and it's as you said, it's a low dollar stock. Yesterday, if you look at the biggest trades, there is basically nothing but call buying. Starting at around 10:34 in the morning, there was a lot of sweep call buying of the Jan 7 calls. This one stock was at 480, and also the Jan 10s, possibly buying into that call spread, but it basically kind of goosed the vol higher. Vol was up like 8-9 points, and similar to Owl, that stock lifted and kind of provided the opportunity to scalp a little bit of money. So this thing, and it did net open about 4,000 contracts, but so the stock's kind of not really doing anything today. But it kind of makes me feel like at the moment these kind of just short-term scalps based on some aggressive option flow, they seem to be working. At least I'm kind of 2 for 2 on both of those tickers. So that's kind of what I'm focused on, is looking for more like that.
I like it. A Viceroy special, spending over 10% of the value of the stock. That always made his eyebrows go up out there. You like this, listeners? Would you be scalping? Would you be more just, I'll take the stock and see what I can do with it? Would you stay far away from these cheapy names? I'm curious. Hit us up. Let us know as we let you know what the final name is in our non-AI trifecta. They don't get less AI, I think, than this name. Maybe Morton Salt is less AI than this name. But other than that, who knows? Maybe they're using AI to calculate the flow of the granules in their storage for salt. I don't know. But whenever I think about non-AI names, for whatever reason, this name leaps to mind. This is Levi Strauss. Ticker symbol Levi, Levi, 22.25, up about 30 cents. You know the deal. They make jeans, not really an AI-intensive business. Who knows? Maybe it's changed. Maybe the robots are making all the denim for days now. But right now, today, it's up about 31 cents or about 1.4%. On the year, it's kind of been a tumultuous year for jeans, which, again, kind of wild. But they are net up a little over $6 or about 38% on the year. So nothing to sneeze at. They were about $16 exactly a year ago. So that puts them up about $6.20 from that level. They did top out earlier in the year in October at nearly $25. And then they came for it. Actually, during the onset of the conflict, getting into mid-March when things were getting dire, the stock sold off to about $17 and change, looks like. So since then, you've had about a $4.50 rally in the stock. So not a bad little run here in Levi's over the past month. They're up 20% pretty much exactly over the past month. Again, over the past year, up 38%. So not a bad year if you don't want to deal with AI. You just want to deal with some fashionable denim. But I digress. Mr. Flowmaster, what'd you spot out here in the land of blue jeans?
Well, first I want to know if Mike is going to yell out all-time highs again, because
Are you ready, Uncle Mike? Have you rested yourself?
Only once per show. I don't want
only once per show. Okay.
Okay.
All right. Well, I'm glad I just covered those futures because we are continuing higher. So Levi's is kind of interesting, and this one is not a case of unusual volume. It's more a case of kind of how the options are pricing right now. And so we do some scans basically looking for kind of vols that are high or low in terms of their 52-week range, and also skew configurations that are steep or flat. So relatively simple. And when you see a name where the vol is kind of low, you can be comfortable owning some options. It doesn't mean you're going to make money, but it means that it's better than when the vol was higher. And Levi's actually shows up as kind of mid to low in terms of the general volatility, but also pretty flat in terms of the skew, which is what I look for to buy a call spread, because basically then the vol that you're buying is not too juiced up, and by buying the vertical call spread, the call that you're selling, you're getting a little higher vol than kind of you typically would. And there is a trade I did, and that I'm not recommending anything, but the July 22.25 call spread. Okay, so with the stock at 22, where are we? 22.20. That call spread lines up for like $1.10 or so to $1.15. It will get you earnings because earnings are before that July expiration, and I paid $1.15 for it for a few contracts. It's kind of one of these nice simple trades. Like, it could make $1.85, right? That's kind of the maximum gain you're going to have on that 3-point spread that you paid $1.15 for. But I kind of like it, and I also like the fact that you're getting some vol at what looks to me like an okay level, and you're selling. So that's it. This one is more pricing based. The volume in it's not the most active ticker in the world, but when you're trading small, especially if you're coming through a retail platform like Fidelity or Robinhood or something, the price improvement is pretty decent. So even though the quotes are 20 or 30 cents wide in some cases, mid-market fills are possible. So that's it. I mean, that's just a little bit kind of something I'll hold on to for the next month or two. And obviously, you have to be comfortable. Stock sells off, you can lose that $1.15.
Interesting stuff. So there you go, listeners. If you are exhausted by AI talk, there's a trifecta of names that have pretty much nothing to do with AI. So there you go. Hope that cleansed your palate as it's time for us to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode. This is normally where I would tell you the results of some of our flash poll we have going on right now, but once again, it is completely broken. So, I don't know what's going on with the Twitter questions of the week, but probably have to put those on hiatus for now until Twitter figures out its own back end there. Speaking of figuring things out, I guess the market has figured out that it liked all those numbers it heard last night and this morning, because we are up now 0.75% in the S&P. NASDAQ up about almost 0.2%. Dow up 1.5%, and VIX cash are about 1730 or so right now. So again, absolutely wild stuff out there. It's all on AI now, listeners. If we get a 7 out, then that's going to be a very expensive line to clear away. A lot of bets stacking up on the line there. But I digress. Let's stop stretching the craps metaphors. Out to Uncle Mike, sir. What are you keeping an eye on until your Monday trivia battle, sir?
I mean, what else is there to look at right now? All-time highs. Looking at that, continuing to monitor the situation in Iran as best we can. We haven't had a good weekend futures freak out in a few weeks, so we're due for one. So make sure that you're hedged properly if you are looking to hedge your portfolio. And that's pretty much it.
I'm convinced the more dire the quote-unquote futures freakout is supposed to be, the more dire the headlines are over the weekend, the stronger the rally on the subsequent Monday. It's happened every time. We've seen a lot of horrible...
It really has.
Over the last... I've tweeted a few times saying, okay, this has to be it. We're literally firing on ships. They're seizing ships. Everything's blockaded. This has to be the day where VIX goes up on Monday and markets sell out. No. Massive rally, vol taken out to the woodshed and executed mob style. So, yeah, at this point, the worse the headlines are, Mike, the more we rally on Monday. Because it's it. This is it. It is all about AI spend now. War, schmore, sir. What war? There's no war going on.
You're sounding like a buy the dip kind of guy now, Mark.
Maybe I'm talking myself into it. You know, a Manhattan Project a day. What can go wrong with that level of spending, sir? It has to work out well, right?
Now you're starting to make me feel bearish.
It literally has to work out well because this level of money being thrown away, I don't know if these names could recover from that. Or the economy as a whole. It just absolutely wild stuff. Mr. Flowmaster, same question for you. What are you keeping an eye on until you and I join together in the same room like Voltron next week, sir?
Well, I do have to say that you're right. The amount of money being spent is insane. However, it does kind of recirculate, right? So, I don't know. It makes me a little nervous also, but I don't know. It feels like an inflection point for this kind of world that we're in. There's earnings, right? Apple today, Palantir and AMD, I think are next week as well. We're finishing April. Today's the last day. Volume has actually been a little bit light. So things have we had a couple days under 60 million contracts, which, nowadays when the average daily volume is closer to 70 million, those feel very, very light. But, and maybe it's an early summer, like you said. But I'll be watching earnings. I'll be watching this macro situation. I think everybody needs to keep in mind there is a chance we could have some sort of a, really sizable sell-off just because we haven't had one. We did pull back almost 10%, I believe it was the lows in February. But, you look at this month and, man, we are back up. And this is the Mag 10 index, which is, our new product, which has actually been because Robinhood's been advertising it and sending out to their clients. We're seeing close to a couple thousand contracts a day in there. That Mag 10 index is up 19% on the month. Okay, so Amazon and Google are the real standouts, up more than 25 or so percent on the month as well. So AMD on the month, just up 73%. So that's it. The macro picture, the remaining earnings, and then packing for Palm Beach, Florida, where we can hang out, Mark.
Packing for Palm Beach, indeed. Unfortunately, that music means we're packing up this show, listeners. But don't worry. If you need more show in your life, and hey, who doesn't? I'll be back in a little bit. Crude oil is on the minds of everybody these days. It seems like a good day to put up the old crude oil bat signal. Who would answer? None other but Miss Energy herself, Miss Carly Garner. So we're going to be talking some crude, I do think, on Twifo. So if that behooves you, I think that behooves a lot of people these days. And then join us for Twifo. Yet another reason why you should be subscribed to the full network. Of course, if you're listening live, we'll be back. You folks can ask questions and have all sorts of fun. Remember, if you're not in the pro yet, this is the last day to get your name in the hat for those sweet members-only trading jackets that I have not promised to anyone, but are a hilariously fun idea. So I'm going to look into that. theoptionsinsider.com/pro. And Mr. Flowmaster, where should they go if they want more SIBO Flowmaster goodness, or maybe they want to check out these Mag 10 options, sir?
Sure, just head over to SIBO.com and you can find, we have pages for all of our products, including the Mag 10, SPX and VIX, obviously, XSP, the Mini SPX. And if you want to take a look at our data offerings, it's datashop.sibo.com. We've got some great stuff there. Some new, there's actually a new individual trade-by-trade file offering, which is basically every single trade that takes place on a SIBO exchange, disclosing the side of market, which is the customer. It doesn't come out till the overnight run, but it's basically kind of one step ahead of the aggregations that go into some of the other customer, firm, market maker breakouts that we provide. So SIBO.com, and then for the platforms, it's SIBO.com/RMA.
There you go, and look forward to that live in-person show with Mr. Flowmaster coming to you from the Southern Studio. Next week, going to be a busy week in the Southern Studio. A lot of folks rotating through. Should be a good time, except for Uncle Mike. He never leaves the cozy confines. Mr. Uncle Mike, if they come up to the cozy confines of St. Charles, what should they expect?
they can expect great service, honesty, good people, and if we see juicy call options on covered calls, we will go ahead and cut a fat hog in the butt with that juicy premium, by gosh. If you are looking for a financial advisor who does make farm references to his covered calls, something I've never done before on this show apparently, feel free to reach out to me. stcharleswealth.com. Book an appointment with me. Always enjoy talking with any listeners from the Options Insider Radio Network.
There you go. Check them out. You too can cut a fat hog in the butt at St. Charles. Well, I'm not going to stop saying that now. That's my new favorite saying. Be back in a little bit. All things TWIFO back after the closing bell. We got Apple popping off. I got a feeling they're going to be an interesting one. Of course, post-earnings flow and all of these wild names. And we got the second half of the session. We're going to keep rallying, or is this it? Cut the legs off from under. Seems like at this point there is no end to the buying, listeners. So we shall see. Keep an eye on that. For after the bell tomorrow, Dr. Vix and other sundry and various guests joining us to talk some vol. Should be a fun time on the show tomorrow. And then, of course, after vol views, you come back to the pro folks for options oddities, all sorts of fun, interesting things, some trades going up. If you have questions about certain trades, I see some going up in the chat right now. We can discuss those as well. All sorts of fun. It is your show after all. Maybe, who knows, maybe it'll be your jackets. Check it out, theoptionsinsider.com/pro. Then back again on Monday for another trivia battle as we join you for another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.